Our guest in this conversation is Anji Ismail, the CEO of Finnt. Finnt is a DeFi app built for families across the world. They raised $3.5 million out of Y Combinator's winter 2022 batch. We talked about growing up in France, Tunisia, and now living in the U.S., what the Tunisian climate is like, both for payments and then culturally, building his marketing company called Doze prior to starting Finnt, and what it was like both getting into and inside of and now out of Y Combinator. Lastly, we talked about some interesting startup ideas. We discussed the challenges of legal frameworks, both in crypto and just generally early stage startups. And we learned what his favorite, most influential book is. So I hope you enjoy this conversation. Here is Anji Ismail. All right, Anji, why don't we kick this off with you telling me what the impetus was, the spark for starting Finnt. I know you had been a founder a couple times before, but coming out of the Optimizely acquisition, were you deep into crypto at that time? Sounds like investing, advising other companies. What did you see that really sparked your personal enthusiasm to start Finnt?
Yeah, sure. I think it's a problem that I've been facing for many years. So I'm originally from North Africa, from Tunisia. My family lived there, and I've been sending money through Remittance for 18 years, basically. So every month I face the problem and the issue of sending money internationally, where you have a lot of fees, and the people on the other side have to basically get cash in a currency that is inflationary. And so I've been looking at different crypto products, crypto projects, and was super interested to see how we can apply that into the broader Remittance. I was at the point of my life where I wanted to build something that I could use myself. And I think, it's a perfect timing to be building in the DeFi fintech space, because there is so much to do.
Yeah, I'm just looking. It looks like relative to the dollar, the Tunisian dinar.
Yep.
How do you pronounce it?
Dinar, yeah.
It looks like from the high of 2008, it's down about 65%, which is, the US dollar certainly has its own inflationary inflation happening. So that's on top of that.
Yeah.
Is that a common frustration for people there to hold the Tunisian dinar, and how do people get around inflation there?
Yeah, I mean, like in Tunisia, especially, I think the government has done what it can to control inflation. I think obviously they are very dependent on importation from abroad, so they are buying mostly with euro, also with dollar, it's mostly the price of the goods locally that are increasing on a monthly basis. And obviously Tunisia, compared to other countries, is doing pretty well, actually. Like some countries, they have 10% inflation per month, right? And some others, they have like 50% inflation per month. So ultimately, I think it's not only the people locally that try to find ways to better manage their own money, and also the governments trying to maintain the economy while they are dependent on so many levels, so many, as I said, importation. What we see locally is that people trust the local currency, but whenever they try to go abroad, buy things online, this is where it becomes kind of a very difficult thing for them, because they cannot go to the airport with their money. They have to change to euro or dollar if they want to go abroad, and same thing when they would like to buy things online or they want to buy something from abroad, it becomes quite difficult.
And is buying it online is not available in how would it typically work? If you're buying something from a standard e-commerce site in Tunisia, do you have the option to pay in the Tunisian dinar, and then there's a back end like payment API that just converts it typically?
Yes, I mean, now there are a lot of merchants, right, offering product and services online to North Africa, to Africa, right? It's much more common than a few years ago. I would say what's still very painful is that you don't have access to everything you will want. So I didn't check like in the past few months, but for example, like a few years ago, just 2 years ago, iTunes subscription, a Netflix subscription, this type of thing. Usually people will try to get these virtual cards that are international. And so you get like euro or dollar currency on those. And also what you will see is that anything that is coming from abroad, you will have a big markup by the merchant. Of course, there is a logistic component into it, but most of it is just because they have to, the merchants, they have to take dinar, for example, Tunisian dinar, and so it's a risk for them, right? So these markets being not stable, the currency not being super stable as well, it represents some risk. So we don't see as many development as we could see from the online merchants. And obviously locals, they are trying to find ways to get that. So they cannot open PayPal accounts easily. I mean, most of the people I know, they are not able to open PayPal accounts. Crypto is forbidden for most of it. So yeah, there is a lot of consequences to the fact that the currency is not strong enough. And yeah, I believe there is a big opportunities for the people there.
So crypto is not allowed in Tunisia?
Yeah, so it's a kind of a blurry, I would say, line that you don't really know. So you will be able to, I know like local Bitcoin, for example, where you can do peer-to-peer, remittance of Bitcoin to cash is working pretty well. Same situation in Morocco, in Algeria, where government will say one day it's forbidden, they will take people and they will put them in jail for some reason. And on the other side, you will look at the stats and like people are using VPN to go on Binance, to go on Coinbase, and try to find ways to create accounts, either through peers, through their friends, through their family that live abroad. So there's a lot of kind of ways to go through it, but yeah, it's definitely like very blurry. There is no clear statement that is fully forbidden or fully allowed, but like people there are looking for this type of solution for sure.
Yeah, totally. I'd imagine, especially in a country that's smaller and the government is less stable, just inherently by being smaller, the currency is more inflationary, and there's just more risk in trade. It makes more sense. The crypto has a stronger, compelling argument there than even in the U.S., where while the banks are not open on weekends and after 5 p.m., annoying, but they are very secure. They have nailed that. Your money will get from point A to point B. And people don't often complain in the streets prior to crypto about payments. So you have this idea to specifically help people living in other countries, probably your own in Tunisia. Conceptually, you're looking around the market and you're saying, well, are we going to build something that does strictly remittances? And do you think about it initially as a remittances business? Because today, it's more oriented branding wise towards family or family accounts. How do you describe the early evolution of the product and where you view it to be today?
Yeah, no, it's a great question because we are obviously still iterating on it. But basically, what we're saying is that remittance has been there for 130 years. Maybe Western Union started in like late 19th century. And there's been some evolution, of course, right? Like there is things like Remitly, Zoom, we mentioned PayPal recently, TransferWise, etc. And what we're seeing is like money transfer is a service where money is going from point A to point B, but most of the time you don't have banking services attached to it. So right now, for a year, like last year, I think it was something in the $800 billion that went through remittance corridors, where you have people living in the US, in Europe, sending money to Latam, Africa, Southeast Asia, for example. And when the money lands in the other country, you don't have any debit card to use that money. You don't have any saving product to use that money, etc. So, for example, people will get the cash. So either they go now, they need to work with like $500 to their bank, deposit it, which none of them do. They mostly keep the cash and spend it. And so we're thinking like how we can build a true global banking product, because most of the banking that has been built so far has been thought in a domestic way, right? Like every bank is building for one single framework, which is you are living in the US, you have a salary in the US, and we consider that your family is also in the US, which is not true today, right? In a remote world, we live in a place A, we might make revenue from a remote employer that is a country B, and we have our family in country C. So we try to build wealth in a 3-dimension, while banks have been built in one single dimension, one very domestic approach. And so that's how we came up with it. We say like how we can use that remittance money that we're sending so that it sits in a sort of an account that can be better used for better saving, better spending, better like building habits around better financial behaviors, so that the people that we're sending money to can get a little bit more from their money, right? So that's how we came up to it, and we really think that we can build this missing layer of banking services using some of the DeFi components.
And so specifically, tell me how this is different than you see it. But as far as I understand it, when somebody sends money, say from the US to Tunisia, you're creating a crypto account for the recipient in Tunisia. Somebody deposits $100 into their bank, they send it to the receiving bank, and that might be a US bank on your side. So you have custody. Finnt would have custody over the bank, receives the money, and then purchases and deposits 100 USDC into the recipient's crypto account on the Tunisia side. Is that roughly the mechanics behind the scenes?
Yeah, exactly. So the idea is that before the money is remitted, it sits in USDC. So the person on the other side can decide to not redeem, to not get the cash, because with remittance, again, they are forced to get the cash, the full remittance money let's say on the first of the month, right? And so it doesn't help them to get better spending habits. It's like if you get your salary tomorrow in full cash, right, at the first of the month, what you will do, you will most likely be spending it because it doesn't yield an interest rate. You don't have a great cashback or reward program. And of course, you cannot use that money that you get in cash to, let's say, do a down payment for mortgage or stuff like that. So the idea is that this money is sitting in a USDC wallet, and only when the person on the other side want to redeem, to remit it in real cash, in local currency, then they can do it. And we are planning to add just debit card so that people can also have the debit card in hand with the remittance money on it. But still, it stays in USDC, which is, as we know, stable to the USD, which is a much better protection for inflation than local currency, than the dinar, for example.
And would you encourage people to be, let me ask it this way. Do you think, does it make more sense to make the product overtly crypto for the recipient end, where it's like receive crypto and then they have the freedom to move it from USDC to Bitcoin to wherever they want, they're in the crypto world? Or do you think it's important to kind of lock it down on stablecoin, or maybe make the feature set simpler in some way?
Yeah. At the moment, the people we were talking to, our first users, first customers, I think most of them, they don't yet trust the full ecosystem, right, of crypto, especially the volatility attached to crypto assets, right? Even if we're talking Bitcoin, ETH, they're still not confident in owning this type of assets. I think we're seeing a will from them to be able to put a little bit in Bitcoin, let's say, so that they can build wealth over time. But right now, what they would like is to say, oh, yeah, I have USD basically, which is USDC, and now I can convert it when I need it for my local errands, for my utility bills, for anything they have to pay locally. I think right now that's really the focus. Of course, there's big upside to bring in more people to the full crypto space, but right now it's really around the stablecoins.
Yeah. I've thought about this in many different startups that I've started and been a part of, where you have this, say in the case of crypto, you have like very eager, inquisitive, high risk tolerant early adopters that are willing to try new protocols, invest in new things, and they're easy to get. You just build a product and tweet about it, and it just like somehow reverberates. Then there's the mass market of people. This is like the crossing the chasm idea, that don't really care about the new thing. They just want to use what's good for them in their life, as long as it's easy and simple enough. And then there's the people who are hard to get, the tail end of things. But the middle is really the bulk. And I wonder how you think about this, coming from, you started a marketing company, and I'm sure you think a lot about marketing, branding, customer acquisition.
Yeah.
Do you think that when you go after the mass market like this, and you're not overtly crypto targeting, are there specific channels that you have to get in with, like whether it's a banking partnership locally, or some kind of radio station, or some newspaper? Like, do you feel like that you try to find as a founder, what's the distribution channel that can really hit home versus going after those early adopters?
No, this is the key. I think it's key to not only for Finnt, for our own company, right, but also for the crypto, like blockchain technology as a whole. I think what we've seen is that, especially in 2017 kind of cycle, a lot of people were super maximalist about, we need to build everything that exists in finance. We need to build it in a more decentralized way, more transparent way, and reinvent all of these things. But ultimately, when you go out and you start asking to the 99% of people who don't know what a wallet is, basically, or what a seed phrase is, what just a blockchain is, they care about the how easy it is to use, right? How it will solve for their pain, everyday pain. And it's like, if I'm asking anyone in the street that is using Amazon, how Amazon is working, what database it is using, what programmation language is it using. Nobody cares. It cares that your package comes in at your door the next day. And I think that's the similar approach we're seeing now in the blockchain, in the DeFi space, where we say, at the end of the day, what people really care about is how they're going to use a service. And that means we have to interface, to come back to your question, we have to interface it with actual banks, actual partners that are already present. So it will be branch to deliver the money locally. It will be actual debit card that works at the merchant, that works at the ATM. And it works pretty well. What we want to solve is that balance between developed countries and emerging countries, for example, or like the inflationary currencies. But ultimately, I think there is a need for finding the right fit between the blockchain itself, blockchain technology as a whole, and existing traditional finance rails that we need to use, so that the end user, they understand how it works and they can use it in a very seamless way. Otherwise, it's just super complicated, and we've seen it, right? Like how many people have lost their coins, how many people got scammed, etc. So that's where I think finding a good hybrid approach between these emerging technologies, blockchain, DeFi, and so on, with existing partners, existing banks, is super important.
Yeah. And is Tunisia a company focus, a country that you're focused on growing within? Or how do you think about segmenting the market? I mean, the world is huge. Yeah.
Yeah, I think so. What's funny is like my co-founder as well is originally from Morocco, and he's been seeing the same issues, and we interviewed basically our families and our friends, etc. But ironically, like probably North Africa is a market we're not going to target in the first month because it's overcomplicated actually. So what we're looking at is the big corridors that are big remittance corridors. I mean, like South America, here being based in Miami. South America is very diverse. There is a lot of money flowing from the US to, let's say, Colombia, Argentina, Brazil, etc., which are countries also that some of them suffer from high inflation. So what we're trying to do is to onboard people that live in the US and in Europe, and then see where their money is going, right? And there is two use cases. There is one domestic use case where people want to use Finnt even for their family living close to them. Let's say their kids, their dependent parents, brother and sister that don't understand anything to money and that they want to help. So we call that behavior such something like the banker of the family. So it's a person that helped the other to find a good banking product, invest the first time in Bitcoin, at Thanksgiving, they say, oh, when do I need to buy Bitcoin? And here you have a way, you have a multi-user interface within Finnt to do that. And then there is this cross-border that we've been discussing. And the marketing is pretty straightforward for us right now. It's like we look at the first user that we are onboarding and we see where they are coming from or where their parents are coming from. And then we have our corridor. So right now, LATAM, Southeast Asia, and a little bit of Africa is where we're seeing the most of the people being from. But now it's how we refine that to focus on a few countries. And this is the process we're currently in to get our first corridors out.
Yeah. That makes total sense to me. How do you think about getting into these markets? So say, for instance, let's just say you're going to target Argentina. Do you think it makes sense to reach out to banks and offer this as some sort of partnership to them, or run Google ads or Instagram, TikTok ads in Argentina? How do you think about like channel acquisition? I'm curious. Once you do target a country.
Yeah, so this is a great question. We've been thinking different strategies. We have few hypotheses. The main hypothesis is that our acquisition is going through the banker of the family. So the person who is in the US sending to Argentina. So we're not thinking about, at least at the moment, going to each individual country and try to build acquisition from, let's say, the bottom up, but more like top down, where the money is coming from and where it's going. And so for that, there is obviously some very specific cultural channels, right? Like people that are, let's say, from Tunisia here in the US or in France, they have some brands that they love from Tunisia that is being sold in France, or they have some key events during the year, or they have some specific dish they love, etc. So it's less about specific channels, I would say. It's more about behaviors and about local customs. So we know, for example, like at specific religious date, there is a huge amount of money being sent to families. So of course, it's our job to be targeting people at this specific event so that they know they can use Finnt for sending money during any of this religious event. So that's how we're trying to think about our different persona and how they behave during the year, so that one person living here in the US might bring in 3 or 4 people from their family living in Argentina or in Tunisia, right? That's kind of how we think about it.
Yeah, I like that idea of thinking about the specific times of year or the holidays, the events that are happening. I've come to learn that even though, say, for instance, if your target customer you're targeting Greece and they all go to a Greek restaurant, I find it, in my past experience, I've struggled to target people where they're together, and more so what I find. So I think of it as 2 ways to target people. You can target people when they're physically near other people. So you can have your perfect customer, they're all together, but they're singing and dancing, or they're eating food.
Yeah.
It's like they're not in the
watching a game.
Right, exactly. They're not in the right mindset to listen to what you're saying, even if they're the perfect person. But then you could have the perfect event, like this person is searching for a bank account, and it's the perfect event, but it's hard to get them together. And I find that I've spent way too much time and money trying to buy people's attention in the former category, and the latter category is better. It just tends to work better in my experience. Yeah. I'm curious if that lines up for you. Yeah,
I think we're still early, so we didn't do any ads yet, etc. But just to bounce on what you just said about targeting people when they are open to getting or like just to be targeted, right? I'm just thinking about Western Union to talk about one of the incumbents we're trying to replace or trying to disrupt. Like you will see a lot of their ads in at a bus station or in the supermarket. You know, this divider that you get at the supermarket between two customers. You have this divider, and they will have this ad. And I realized, like, people look at this and they are in their thought. They're, I have pasta, I have meat, I have cucumbers, whatever is there. And then they think about it's a process, right? It's a process. Oh, I'm going to spend money. I'm buying food. Wow, Western Union is here while I'm doing this. So they should be here when I'm doing that for someone else. So I'm sending $200 so that my family can also buy food and can also think about what they get on the table. So I think that's really true what you're saying, and I think for this example of Western Union is super interesting, because I'm pretty sure in the past decades they've been running a lot of tests to find out that at supermarket using this divider, it's working pretty fine in terms of brand positioning and being present for the customers.
Yeah. Although I'm never too quick to give large, old incumbent companies too much credit on the sophistication of their deployment of marketing money. Sometimes it's just they're just doing it because they've always done it, and they'll just continue to do it. Yeah. Like, how well do the probably billions of dollars, or at least millions, tens of millions of automotive company commercials? Like, I've watched probably hundreds in my life, and I don't know that I've been not consciously, at least, influenced to buy a certain car from any commercial I've ever watched, but they're still going to roll those things forever.
Yeah. Definitely. And Tesla is making
exactly.
no advertising, and they're selling like
by far 10 times bigger than any other car company.
Yeah.
What did you learn when you built Capsio? Switching gears a little bit, you built a company. You spent 8 years building this company.
Yes.
When you were younger, from what, 2008, 2016? Does that sound about right?
Yeah.
What product did you offer, and maybe what high level things did you take from that experience?
Yeah, sure. It ended up being rebranded as DOZ. That's just like a better name that we found out. First, I think one big thing I learned is to work with my co-founder, Fauzi, who is now also the co-founder on Finnt. So it's been like 14 years of working together almost, at least in a structured way through DOZ, Capsio. We were just out of school. It was 2008, 2009, like the world was crashing, like banks, were just bailing out, and you had like no internship, no jobs, even in France. Like it was a nightmare to find an internship in that period of time. And so we said, we have this idea. We've been working on like a concept about a marketplace for marketers, so that any brand can hire the best marketer everywhere in the world. And so we said, hey, let's build a startup. I think at that time we watched like maybe Social Network came up like a few years after. So we watched like some Silicon Valley show as well. And so we're like, we should do that. Ultimately, I don't think it was a bad idea. And we're seeing now, like 12 years later, we're seeing companies that are doing that at a very good scale, like in the few I would say dozen $1 million in revenue, which we never reached. We most likely were super early, and I learned that a great idea in a market that is not mature is not going to have legs, because ultimately you will spend so much time just educate the market. And like basically at the time, Uber and Airbnb were not that big, or not even a thing for Uber, for example. And like I think in 2015 we started to come up with the actual concept saying, hey, we are Uber for marketing, something like that. And that was the time we got most of our growth, and we got fundraising and all these things happened at the time. But it took 6 years to get at that point. And we were just tired already. Like when it was time to really grow, we were tired by the idea. We had bad process in place. So I think what we learn is that when you are early in the market, you should switch idea until you have this idea that is doing what it needs to do at a precise time. So it's solving a real pain. And the reason why the market was not ready is because the market was not experiencing a pain big enough, right? In a remote world in 2022, where you can hire people from all over the world, having marketers all around the world will make much more sense. But in 2009, social media budget, advertising budget, online, etc., were like I don't know, maybe a tenth of what they are right now, and especially it was much less distributed. So I think like the time to market is key, because at the end of the day, as a founder, you just have 6 days a week to make it work. And so if you work so much on just convincing people that they need to use your product, it means they are not experiencing a strong enough pain, and the market is not ready for whatever great idea you have. So if you're Elon Musk, then yes, maybe you can say, hey, I'm going to fly rocket and do driverless car and stuff like that. But if not, you'll probably just spend a lot of time and a lot of energy trying to find that market. And when you actually find it, then you don't have the stamina and you don't have the energy to make it a $1 billion company, basically.
And had the company changed in those 6 years, or is it just the world changed?
Yeah, I think it changed. Like we tried to adapt. We did a lot of iteration without process, and I think that was an issue, right? Like iterating is great, but you have to know you're iterating, and not very different from being in the dark and trying to find your way around. So you think you're iterating, but actually you're just finding a way out, finding something. I think it changed. Like we tried to incorporate some of our learnings, etc. But ultimately, I think the market evolved also. Yeah. So we were able to capture a little bit of that wave, especially 2013, 2014. But ultimately, to make it grow as fast as we wanted, I think was just a little bit too late in terms of how the company has matured, what the process we put in place. One example I give most of the time is that we had all these customers that were from a previous model that we were never strong enough to just fire. We should have fired like maybe 30 or 40 of our customers were making some of our revenue because they were not being sold the right thing that we were building. And so it just creates like two companies within one, where you have like this customer support, you have this sales cycle that are very different than building a software company with a SaaS model, etc. So I think the company in itself changed a little bit, but not enough to be reinventing itself with that new market that was coming. So we kind of exited it in a very small way, but great learning curve, great experience, obviously, big roller coaster.
Yeah, it sounds like it. And now you mentioned process a few times. When you're running an iterative process in early stage, say before you really find that boom of product market fit, how structured do you and the team get with this? Like what tactically does it look like? Are you in 14-day sprints where you're looking for some, like how do you think about it?
Yeah, I think so. There is some good, like much better explained than what I would try to do right now. But like Y Combinator, for example, is calling it like small bets iteration, basically. I don't like the 14-day sprint is really for engineer to put together like the actual features that will come from the bet. But I think the iteration is more like 3 to 6 months period of time where you go all in on one hypothesis that you have. And of course, the more money you have, the more hypotheses you can run, most likely, and then you can reach your product market fit. I think for now, for example, at Finnt, we have probably like 3 big hypotheses. Right now, we're working on one. There is two others, and hopefully this first one is successful enough so that the second and third one can be just addition. We can add more revenue and add more customers. But back at those, we had a lot of hypotheses, so we were not discarding any of them. We're maybe working on 3 different at the same time. So this is where you don't have process, right? You put all your resources in 3 different things, so everybody's focused on different stuff. Then you don't set up appropriate goal, which is another big mistake, right? Like if you have this hypothesis that is clear, they say, I'm going to give 6 months to do that thing. You need to define exactly what is the goal you want to achieve. Is it like an amount in revenue? Is it like a number of user and so on and so forth? Because if you have an hypothesis that you cannot measure, ultimately it will fail. So, and again, at those, we were just doing all the hypotheses, not measuring them correctly. And obviously at the end of the 6 months, we're like, oh, this worked half, this didn't work, and this worked a little bit. And then you cannot compare it really, and you don't know if you should pursue one or the other.
Yeah.
So I think, I think a process in iteration is super important, right? Like the lean kind of model is now super famous, but ultimately everybody has its own way. For me, it's really having a very clear hypothesis, a time period where you want to measure it, and then a goal, like to make sure that you have a goal that is tracked.
Yeah. It's so easy to fall into this psychological trap of just continuing this experiment. Hey, it's kind of working. Like we got a few people, and then you're 6 months in, and you're like, well, we'll just keep going because this is what we're doing, and it's sort of working. The sortas will kill you. Like it's kind of working. It's easy to know on the extremes if it's completely dead or if it's booming, but in reality, it's like there's always some spark of hope, but it's quiet, and you're not sure whether to keep going down this path.
And it's hard. I mean, it's from an ego perspective, it's hard to say, my hypothesis was wrong, and now I need to change to something else. You will always find like hard to say to yourself, oh, what I assumed 6 months ago is totally wrong or is half wrong, and I need to change it. So it's very natural, I think, to say, it worked a little bit. Look, like this is positive, and then you hide 90% of the thing that didn't work, and you just say, oh, this was bad luck, or we didn't do that, or this is because of this person, and so they try to point a finger to other people. I think that there is it's super hard to come back on the early hypothesis. So ideally, what I'm trying to do is to write them, clearly on the paper, on the shared doc, and so here are my hypotheses. So 6 months after, I can really check what I was saying 6 months ago, and just compare that. But it takes a lot of work on myself, and I think on any founder, it's really a work to do.
And timing too, to know whether are you early, are you too early? Because being early is a good thing, being too early is a bad thing. If you're early and you have all the infrastructure built, or you're building it, and then the market catches up, it's like that's like riding the perfect freaking wave. It's like you get up on the surfboard and you're like, you've been ready for this before other people. Because if you jump into it, you can't build a crypto exchange today and think you're going to like catch that first wave. Like that was Coinbase, that was Kraken. Those days are past. Now we're on to the more sophisticated concepts, and there's always more waves. That's the lesson of nature, really. Is there's always more patterns of macro opportunity where a lot of people are changing the way they do things, and new problems will arise from that, and then new solutions.
And we are in a perfect cycle right now, like the kind of the market downturn, like crash, whatever it is. Right? It's a perfect opportunity to be riding that wave. I don't know like how easy it is or how not easy it is, but definitely when you come out of a downturn, then you're ready for the big bull market and stuff like that. So I think, I totally agree on that. Like, there is a lot of opportunity to be riding those waves.
Yeah, totally. I want to ask you a little bit about your move. So you moved from Tunisia to France to the U.S. Is that the trajectory?
No, I was born in France, so I was lucky because France is a great country. But yeah, most of my family is in Tunisia, and I got there very often. It's my second time immigrating to the US. First time was for DOS back in 2012, 2013. We had an office in San Francisco, so I spent a lot of time there. And then I went back to France, actually got my first daughter.
Congrats.
And thank you. And moved back to the US in 2019 to take a job in New York. So that was actually my first full-time job. And from New York during the pandemic, we moved here down in Miami, where I had my second kid, my little boy. And yeah, now we are here. Like, really love the spirit being built in Miami. Actually, the ecosystem is pretty great. So yeah.
And so I'm curious at the process of going through YC. So it was completely remote at this time when you went through it. Is that right? They still are?
Yeah. We were in winter 22 batch. So starting January and did mid March. It was fully remote. I think that's probably one thing that was super great for me, because with a family with two kids, probably I won't be able to travel to San Francisco for 3 months. My wife will kill me.
Yeah. Totally. Yeah.
I would have loved. I would have loved to have maybe 3 days or 4 days to meet the batchmate, but YC is a very, very, very well oiled machine. So even though everything happened remote, online, it's so well structured that you don't really feel that you're in your home or whatever office you have. You have so much resources. Partners are super always available, basically. And so the batchmates, all the other companies, you have a Slack where you can talk to them and do online meeting as well. So we have a small community here in Miami of Y Combinator founders, but obviously now it's very, very distributed. You had people waking up at 2 a.m. to attend meeting because they are in India or Australia.
Oh yeah.
So it's for them. That should be much more tough than it was for me.
Yeah, and so 3 months long. Generally, the schedule for the YC remote is what, a couple times a week. There's set meetings, office hours, and then is there heavy preparation for demo day? Is there a demo? I haven't caught up with
there was. Exactly. So you have basically two big events per week, where you have either former founder coming to talk, people will give you great advices on product iteration, on riding those waves that we talk about, marketing tactics and things like that. And obviously, you have some great successful people, so you just can learn, founder of Coinbase, founder of Stripe, and so on and so forth. Then you have some smaller group discussion with your batchmates that are super helpful, because you basically are a group of 10, 15 funding teams, and you will be sharing what's in your head at the moment. This regulation just passed through, how it affects your business, or we're trying to hire for this position, where should we look, etc. So that's super helpful. And obviously the big day, I think it's the graduation, if you want, is a demo day. It's because we were 400 companies, it's running for 2 days. So it's a bit crazy for all the investors watching that. And it's amazing. I mean, so it's just 1 minute, so you don't have too much pressure. If you confident enough in what you're building, you just explain basically in 3-4 very precise bullet points what you're doing, why you are the best person to do that, etc. And then you get your inbox flooded with investor willing to invest. That's really the thing, right? I mean, we were super lucky, obviously, because I think the market is cooling down a little bit. So mid-March was still very very hype. And so we got a lot of interest, and we closed our seed round just like a week after. But it's an amazing experience because you know you have like 1,000, maybe a bit more investor on Zoom watching you.
Dude,
so it's pretty funny.
That's wild. It feels like a machine at that point where you're just 1 minute, 400 minutes total. These emails that are going out are probably automated to you from the investors, and it's like a giant mechanism. Yeah,
exactly. Yeah, exactly. That's why I said it's a machine. Like I think YC was able to scale into something that like a lot of, I think even myself when applying, we're like, oh, maybe now it's becoming like too big. And so how are we going to benefit from it, right? But ultimately, what they're doing, I think, is not only smart for the model, but also is needed because you have founders in all around the corners in the world, right? Where YC used to be a bit elitist, to be like Silicon Valley, very focused in like 50 miles area where the kids from Stanford will go, etc. And now you have people in the middle of nowhere in Asia, in Africa, in Europe, and they attend those programs, and then they build amazing companies. So I think it was super hard for them to build that machine, but it's working pretty well. And those automated email, what's funny is like, they say, hey, I want to invest in your company. And if you reply, then like maybe the same day or a few hours later, you have a wire coming in. So that's why it's crazy. And then you talk to founder who didn't do YC, and they're like, oh, I have a hard time to raise funding, etc. Because most likely they are not in the right space, in the right area, and they are not able to connect with those investors. But now you reverse a little bit the power, if you want, and YC build that brand so that it can expose founders, and then founders are just waiting for checks to come in. It looks like super easy. It's not that easy, but I think, I just wanted to underline how that machine is working pretty well.
Yeah, it seems to be the important part about that machine is the filtration process up front, and then the cultivation process throughout. The ongoing cultivation certainly helps with the network, but it doesn't make your company. Like after we stop talking, you're going to be staring at a computer screen with these big problems. And it's like, ultimately, it's up to you. You need money to be able to pay rent and buy food and live. But even the money itself doesn't solve the problems. And we know that, but it's important to underscore because often people think of YC, Techstars, maybe really YC has taken the early lead as a place that just makes companies successful. But I think in large part, they are really good at filtering out the high likelihoods of failure. And instead of no one knows, I mean, you don't even know how this is going to go, but you at least know that you are capable of giving yourself a fighting chance. And the pattern recognition to determine which founders are in a good position, the fact that you guys have worked together for 13 years, the fact that you're in a space that is early enough to be exciting, but not too late to where it's super competitive. I'm sure they have a checklist that they go through, and each partner checks off the boxes, and it's a scoring algorithm.
And they have, exactly. They have it in their mind.
Yeah.
This is what is crazy ahead. Like they can, like any partner, they are able to analyze, like, I don't know, thousands of data sets, and they say, okay, if you are set up this way, like from the company incorporation to any business decision, they have, of course, like spreadsheets and all sort of like database or whatever to rank the companies, etc. But the partners are able to identify business issues and tell you, hey, from 5 companies that were in the exact same situation, 3 were not listening to what we did, and they failed. Right? 1 listened and did exceptionally well, and 1 listened and did pretty okay. And so just like they don't have any interest of making up these numbers, etc., because it's mostly public now. They are publishing a lot of their startup valuation, etc. And so this data set that you mentioned, I think that's the actual value. And so that's how they build then the whole resource around it, the whole network of investors, etc., because they know that in 2022 the market where they should have startups working on is obviously not like things that are from 10 years ago or that are from 10 years from now, even though there is some outliers that are building crazy things that are super impressive, like mining under the sea. There was this company that's doing crazy things, or mining in asteroids. There is like really outlying companies as well. But I think in the big average, they are able to identify those business with the setup, as you said, with the founder, with the funding team, etc. And this is their biggest value, I think, the data they have on all these companies.
Yeah, so true. I want to ask you a little bit about something else. You mentioned regulation a little earlier. I ran a crypto company for 3 years, sold it in 2021. We were a marketplace for trading Bitcoin with gift cards.
Nice.
It was a decent exit for us. One of the things we struggled with was becoming confident enough in our regulatory position. And especially as the U.S. is still kind of vague with crypto, and obviously Tunisia and majority of other countries will be vague for a while because crypto is advancing quicker than the rules can catch up. How do you, what process do you go through, if any, to ensure what you're doing or what you're attempting to do in these bets, these product iterations, is legal? Is there a tool that you use? Is there like a methodology, or have you seen anything?
Yeah, I think that is probably the less structured thing, because it's the way it is, right? Like laws, regulation, compliance, all of these are a lot of big, very long papers that can be interpreted different ways based on the jurisdiction, based on the states. Here in the US, it's even harder, right? Because you have one country and then you have 50 states that have different interpretations. So obviously we use very costly lawyers. We love them. I talk to them often. They're expensive. I think that's a must-have. Also, I'm trying myself to just read a lot and listen different podcasts, that will mention things and that will light something in my head, say, oh yeah, I need definitely to check this, because ultimately in the culture of the company, what we're trying to make sure is that we have goodwill, right? That we are doing things in the regulated and compliant way. But obviously you don't know, like if you see a nice backyard with grass, and you walk in a hole that you don't see because the grass is so good, you will get your ankle broken, right? And that's kind of the same thing with crypto, with regulation. Like you see this field of opportunities, and then wow, New York State is like, if you do this, boom, you can get a CC letter and then go to jail or whatever crazy thing. So I think having this goodwill, like making sure you're not building a scam on purpose, which is, there are people that are building scam on purpose, like they're really willing to just take the money of others and not delivering any value. So trying to not do that, that's the first rule. And then obviously trying to read enough, trying to talk to people who know better. Most of the case is like other founders, other lawyers, etc. And try to incorporate that slowly but surely into our model. And yeah, I don't see any. That's a big, I would say, the big cons of building in an industry that is early. But there have to be, there must be like some difficulties, there must be some challenges. Otherwise, it would be too easy. And so that industry will be, as you said, like overcrowded, over competitive. So yeah, that's how I think about it. But you're definitely right. It's a pretty hard space to be in, with all this moving regulation, not very clear lines that are, again, in the US, it's a big ball of mess.
Yeah, totally. Yeah, I've thought about recently this idea. Are you familiar with Stack? What is it? Stack Share. So StackShare is
StackShare.
they're like this tool that allows you to see what other companies are using for technologies. So if I'm building on-demand hot dogs, like I can go up and I can look what Uber has built, and you can, that at least gives you an idea of what databases, what architects and everything else. And I've wondered, could you do the same thing with legal, where you show like, okay, let's see, what did Coinbase do, or what did, name a company. And at least if you could access the patterns of what different companies did, then because in your position, you want to make sure it's not just that you want what you're trying to build to be legal. What you really want is you don't want to be the outlier. Like if you learn that 10, 15 other companies have taken the same stance as you, then just take that stance. That's all you need to know, especially if those companies are billion-dollar companies. So I think it's almost like recalibrating the objective for small companies to ride with the herd structurally, if they can. And instead of hiring expensive lawyers to give you a full audit and legal review, you can take this approach. I don't know.
I mean, that would be amazing. Yeah. That would be an amazing company. I think there is definitely some fintech vendors that are trying to provide. I saw it in a few places something called like compliance as a service. Ultimately, I think like every business is a bit different. Like the setup is different, the value chain is different, the revenue model is different. And so that's why lawyers will say, you never use a template because you're gonna be doing something that is not applicable to your company. But I agree. I think at the stage we are now, with so many companies being built in that space, there must be like patterns that can be reused. And so we're trying to do that, but definitely it's not exposed. Like there is not, at least that I know of, there is not a great place where I can see that. And even in the YC community, for example, it's a lot of discussion. You're set up this. You're here. You should do that. Or you are issuing a token. You should do this, etc. So it's always a bit blurry. Maybe it's also it comes with maturity of the space.
Yeah. Interesting. Yeah, because that's been my experience too. And I was like, that should be. Who knows? Just another idea. So many ideas.
It would be a good business, I'm sure.
So what else is top of mind for you? So are you outside of the crypto world? Are you living up Miami? Are you writing publicly? Are you blogging anywhere that you're publicly accessible? Twitter? Are you personally on Twitter?
That's really the only place where I say stupid things is Twitter.
Good.
And then everything is private. But I mean, I don't have. I've been on Twitter for like 12 years, and I have maybe like not even 2,000 followers. So I'm like, what should I say to get more people to listen to the stupid thing I think? No, but like Twitter is actually this is Twitter is so like underrated by my friends that are not in tech. Like I'm telling them, like they always say, hey, where do you get your information? Where do you get your thoughts, etc. I say, hey man, I spend so much time, like at least an hour per day. It's like I don't read newspaper too much. I don't watch like news and stuff like that. I read blogs if I found them through Twitter. I listen podcasts if I found them through Twitter. So it's just such a great curation tool. I mean, I love Twitter, and I hope it continues to be great. Maybe in the hands of Elon Musk. We'll see.
We'll see.
Really love it.
That's awesome. Well, congrats, man, on all your progress, and congrats on having 2 children along the way. That's amazing accomplishment in and of itself. We'll include links to Finnt in the show notes. And one last thing I want to ask you: are there any particular people, any particular books or things that you've learned from or have shaped your worldview or personality in any way? Anything you want to throw out there?
I mean, there is one book, like if it's like for founders, it's really something that comes up a lot, but it's The Art Things About Art Things. It's just the best book. I think the hardest thing in founding a company is basically firing people, right? I think and even I've done it several times, and it's still very hard. And I think this book does a great job at explaining why it's so important. Like, why it's so important to be able to identify when something doesn't work well with someone, because a company is like life, right? There is some feed that works well and some other that do not. And I think this book was kind of a revelation, where I was still running those at the time, and I had some hard decision to make. And this book like kind of tells me, hey, you need to act, because not acting is a worst thing that can happen to the company and to yourself. So yeah, that's one book that I personally love, and I read it sometime.
It's a good one. I did read it, but it's been a long time, so you're inspiring me to reread it.
Yeah, I think it's a good one to reread.
All right, brother. Congrats on all the progress, and hope to have you back on someday.
Yeah, thank you, Mike. Thank you for having me. It was great.
See you, buddy.
See you.